In classic trading, it's simple. Draw support and resistance levels, and you'll understand the market. In practice, it's different. 9 out of 10 traders draw levels subjectively. Some connect highs, some touch points, some by shadows, some by candle bodies. Result, dozens of lines on the chart that contradict each other. And most dangerous, trader stops understanding where the truly important price is. Each approach to a level triggers emotion, doubt, impulse. Tilt begins. Problem isn't lines, problem is lack of understanding the reason for reaction. If you're following our course, subscribe to the channel and check out Strifor's Telegram, daily market updates. Link in description. Level isn't a line, it's a liquidity zone. Professional approach goes deeper. Level isn't a line on the chart, it's a zone of interest for large capital. Price doesn't just reverse from a level, it comes to a liquidity zone. What is liquidity in simple terms? It's a place where a large number of orders are concentrated. Stop losses, limit orders, pending orders. Large participant needs volume to open or close a significant position. They can't buy millions of contracts in emptiness, they need a counterparty. So market often moves from liquidity zone to liquidity zone. First stops are collected, then acceleration happens, then distribution phase begins. Distribution, how big players sell to the crowd. Important term, distribution. It's the process of position distribution by a large player. In simple terms, large participant gradually gives out accumulated volume to the crowd. Price may look stable, but inside there's a control shift happening. This is why market often reverses not on first touch of level, but after volume accumulation inside the zone. How does a beginner identify a truly important level? How to find a truly important level? Start not by looking for a perfect line, but by looking for a place where one of two things happened. Either strong movement stopped abruptly, or powerful impulse started from specific price. Logic is simple. Only large capital can stop strong movement or move price impulsively. If market reversed sharply, there was interest there. If price exploded from zone, volume was accumulated there. These are key zones. Yes, there may be struggle around them. Price may break through, return, test. Market doesn't have to be clean. But now you understand main thing. Level isn't geometry. It's trace of large participant activity. When determining level, ask questions. Was there strong movement? Did it stop abruptly? Did impulse start from here? Is there liquidity here? If answer is no, it's just a line. Practice assignments. Practice. 4 assignments on Strifor demo account. Assignment 1. Find where momentum was stopped. Open H1 or H4 chart. Find section with strong impulsive movement, sharp drop or rise. Determine in which zone movement abruptly slowed or stopped. Mark this area. See what happened after. Random pause or reversal. Was there volume or acceleration after exiting the zone? Goal. See where large capital might have entered the game. Assignment 2. Find zone where impulse started. Mark area before impulse. See if there was consolidation there. Check if price returned to this zone later. If it returned, how did it react? Goal. Understand that levels often form where market accumulated volume before movement. Assignment 3. Liquidity and false breakout. Find level that was broken, then price sharply returned back. Where were most traders' stop losses? Could this be liquidity collection? Was there acceleration after return to range? Try to explain situation not as market deceived, but as logical movement for orders. Goal. Start seeing market mechanics. Assignment 4. One level, one reason. Open clean chart and mark only one truly important level. This should be place of either strong movement stop or zone of powerful impulse start. Forbidden to draw more than 3 levels. Answer. Why is this level important? What's the reason behind its significance? Goal. Get rid of habit of overloading chart and learn to choose what matters. What's next? Let's sum up. Market doesn't move from line to line. It moves from liquidity to liquidity. Level is a zone where there's interest. Interest appears where there's volume. Volume where there's large participant. Write in comments. Did you used to draw dozens of levels on chart or focused on key zones right away? Next session, we'll connect levels with market structure. We'll see how to determine when level is ready for breakout and when for reversal. Don't miss it.